back to Golden Rule Radio. We are recording here Wednesday, May 23rd, and taking a look at the precious metals market. Gold did finally come down to that 1285 support, and we've been bouncing just above that here for the last couple days. Tori, what do you think? Gold's going to hold?
So far, so good. I'm not going to try to predict whether it's going to hold. I think, sitting here on these technical support levels is certainly encouraging. It's discouraging from the standpoint of a lack of activity. The market has gone completely silent since last week's manipulation and the dumping of all those future contracts. So it's sort of feeling like we're here artificially, but we are here normally seasonally. So if we're going to put a low in for the year, it's almost always going to be May, June, July, sometimes in December. But yeah, whether it holds or doesn't hold, we'll get into that in a little bit.
Tori, we seem to, over the last couple of years, have this 6-month cycle where we put our lows in. I mean, you look at December 2015, which was the ultimate low in the market we had over the last decade, following a drop in about May or June. Another December 2016, same thing, drop in May or June. December 2017, drop in May or June. So here we are again in May. Lo and behold, we're probably putting our low in for the year. Now, we are looking at support based on a pretty short-term move just from December lows in the low to mid 1200s up to that 1365 number that we saw earlier this year. So obviously you can always have a sell-off that exceeds that based on levels from previous positions, 2016 levels, 2017 levels. However, there's a pretty good argument here that we could see gold hold here. Now, anytime you have a reversal, we just had a down move, anytime you have a reversal, and if you look at these other reversal points on the chart, that tends to happen pretty aggressively. So if we are going to see gold push back up, it should start within the next couple days. And if that takes place, I'd be hard-pressed not to argue that we're going to get past the 1365, 1370 ceiling that we've been stuck at since about January and finally get up into those 1400 numbers.
I would love to see it, obviously. I mean, it's always more enjoyable when the price is climbing, but when you're buying gold for fundamental reasons, you're only looking at the technicals for entry and exit points in the short term. So this is an entry point. I know we've harped on that in the show. So we accept and willingly welcome, obviously, the opportunity to step in at a lower price. We are all about accumulating ounces over the years, accumulating a percentage of a portfolio in the physical precious metals. So if you have an opportunity to save 3 to 5%, of course you're going to want to take advantage of that. I do expect there to be a rate hike in June, and we've seen a bounce the last 5 consecutive rate hikes. That could be what starts your stimulus, Miles, that you're talking about that gets us back into the 1300s and possibly above. I do want to talk about a few other fundamentals, but let's not leave the metals yet. Miles, why don't you take us into silver?
Yeah, Tori, looking at the white metals, I think it gives a lot of credit to the argument that gold may be putting in that interim bottom. I mean, silver did not do what gold did. And I think there's a good reason for that. We talked about it last week. We had, $14 billion worth of contracts sold before the New York market opened, I think on Tuesday last week. So it makes sense that silver and palladium didn't really follow suit.
That's just an excellent point. I mean, the silver and the palladium non-confirmation is huge. Gold mining shares are saying the same thing. They are not conforming to gold coming down any further. And when that happens, it is sometimes that the white metals lead on the way up, and sometimes the white metals are telling us that we're actually going to take a pause on the way down. And there's far more volatility in metals like silver and in platinum and palladium when it's economically sensitive. So with that manipulation last week and with this being a seasonal low, those are some encouraging points for me to take away. And I'm going to tell the listeners right now, if you're adding to ounces, just make sure your position's taken by about August 1, because that is when you tend to put your seatbelt on, going back to Miles' seasonal analysis.
And as usual, all of this hinges on the dollar, and I think the dollar is at a pretty interesting point right here at around the 94 level on the dollar index. The 94 level, if you draw that chart back a little bit, looking at the end of 2017, we have a pretty apparent head and shoulders pattern that built on the previous potential correction that I'll draw here on the chart. We have just come up to that right shoulder level, so it is also likely we could see the dollar turning around, and I think that coincides with your comment a second ago regarding potential interest rate hikes. Now, let me add one more point to that. Look at the Dow. The Dow, I think, still has room to go up. So if we have a dollar decline pending in the next couple weeks here, that's going to push gold up, that's going to push silver up, and that's going to push the Dow up to the end of its correction, which I think is around 25.4.
You know, the McAlvany weekly commentary this week touches on a couple of issues. Okay, one is just the incredible level of debt in America right now, the amount of borrowing that the individual and particularly the government has to do on a daily, weekly, annual basis. But secondly, talking about what asset prices do in relation to interest rates. When interest rates climb, asset prices drop. It's that simple, and that's a Warren Buffett theory. And it's not just theory, it's kind of a proven point. So Miles, tying all of that together into one big picture the way you just did is really invaluable.
Yeah, Tori, moving away from just the short-term technicals of the market, let's certainly not forget the fundamentals and the black swans in the room that can show up from time to time, two of which being obviously North Korea and the continued issues over there, as well as the Middle East.
Yeah, I totally agree. Geopolitics trumps all when gold is sometimes reacting. It's reacting to geopolitical strains, and we can't predict timing on any of those things. Yeah, the summit looks like it's probably called off with North Korea. Does that immediately lead to increased tensions and war games? I don't know, not necessarily. But, you know, you also have this continued conflict in the Middle East, and it's such a hotbed because, you know, Russia doesn't want one particular country dictating all terms in the Middle East. They want Middle East uncertainty and conflict. Okay, Iran wants access to the Mediterranean Sea. They don't want other nations encroaching on their borders. They also want to do away with Israel. So there's conflicting strategies there that are protecting the Assad regime, and yet Russia and Iran are technically allies in that region for completely different reasons. Oil and gas, certainly it comes down to that as well, but the higher the oil and gas prices are, the more it suits Russia, and it doesn't necessarily suit Iran, especially with new sanctions. So we can see increased war games, and remember, war games now focus more on the monetary side of things than they do on the guns and missile side of things. And so get ready for increased sanctions, not just doing away with the nuclear deal, but increased tensions as a result of increased sanctions on Iran and some of the other countries.
So all in all, as North Korea and the Middle East play out, let's also not forget that Powell speaks on Friday this week, and we've got consumer confidence coming out on Tuesday, as well as the gold price we talked about earlier. You usually see those prices move within 7 to 10 days, so we're going to be nearing the end of that. By the time we get in here to record next week, we could have a very different looking market, and I'm certainly looking forward to see how things play out.
ICE 2, we talked about the Fed rate increase. That would come between June 12th and 13th. Those meeting minutes would be released on the 13th or so. So you got a couple weeks to gather info.
So that should about do it this week for Golden Rule Radio. As always, if you like what you heard, hit the subscribe button, ring the bell to get notifications. You can always head over to Twitter at ICA Gold. Stop by our website, McAlvany.com, or give us a call anytime at 1-800-525-9556. Thanks for listening.
Have a great week.